Thanks for joining me this Friday, the 15th of November. I'm Grady Wolf, market analyst with Bell Direct, and this is the weekly market update. We are now at the end of receiving quarterly updates from ASX-listed companies, so let's dive into how FY25 is shaping up so far at the end of Q1 and which companies stood out this week. This week we saw Australia's biggest bank, Commonwealth Bank of Australia, soar to a fresh record high after the big bank released a quarterly trading update. For the first quarter of FY25, CBA reported unaudited statutory NPAT of approximately $2.5 billion, which is flat on the prior corresponding period. Business lending volumes rose 9.9% in the quarter, home lending rose 4.5%, and household deposits rose 6.5%. Operating income increased 3.5%, while troublesome and impaired assets increased to $8.8 billion, or 0.63% of total committed exposures. The outlook from the big bank is that while inflation is showing signs of easing, growth in the Australian economy remains slow. But the bank remains optimistic on the overall outlook for the Australian economy's strength in the future. Shares in CBA rose 2.06% over the trading week to end Thursday's session at a fresh record $152.84 per share. Building materials producer James Hardie Industries bucked the market weakness this week to gain over 13% on the release of the company's second quarter trading update. Despite outlining profit dropped 23% in Q2 FY25, results out yesterday due to weakness in China and Europe, while its North American division is the key driver of revenue, is expected to continue growing. Well, with tailwinds in the US from hurricanes, increased wear and tear of homes requiring siding replacement, and an uptick in new home builds in the US, we see James Hardie's earnings growth runway expanding well into the new year. Xero shares popped on Thursday after the cloud accounting software company released a first half trading update demonstrating the company's strength in delivering growth despite the challenging market environment. For the first half of FY25, Xero reported revenue rose 25% to 996 million New Zealand dollars, a New Zealand-based company. A 6% rise in subscribers overall was reported. Average revenue per user rose 15%. Free cash flow rose 96%. Gross margin rose 1.4 percentage points. And NPAT increased an impressive 76% to $95 million. Xero also launched the first tap and pay product to the market during the period, which allows Australia and UK small businesses to accept instant payments from their smartphones. So a very strategic expansion. And the strength doesn't stop there for Xero, as the cloud accounting giant launched several beta products in the AI space, including Xero's Gen AI powered smart business companion, Just Ask Xero, or JAX. Crop protection and seed technology solutions company Nufarm rallied 6% on Thursday after releasing full-year results. Underlying EBITDA for FY24 came in at $313 million, which was in the middle of the guidance range, while revenue across the group fell 4% and the company posted a statutory net loss of $6 million. While the results appear disappointing for FY24, the outlook may have been driven by the Nufarm's driver and rally yesterday, with cost-cutting measures, scaling growth plans and stable prices heading into FY25, boosting investor optimism for the company. The outlook for FY25 is very mixed based on results we have seen across the ASX-listed companies so far, but some key themes for the remainder of the financial year include weakened demand in the first half has impacted earnings across most sectors, as was expected. Elevated input costs have eaten into margins across every sector. The outlook for commodities remains volatile and has seen an increase in hedging through forward contracts for companies like Woodside to reduce exposure to downside spot price risk. Single-digit earnings growth has been a common earnings result across the board, which was expected heading into FY25. With the likelihood of higher interest rates for longer in Australia, demand is expected to remain subdued across the board through the remainder of FY25. Black Friday sales are starting very early as retailers push to move inventory through increased promotional activity, which is good for cutting down stock, but selling at a discount eats into earnings. The supermarkets have even had to to increase promotional activity to prompt consumers back in store. Investors are welcoming forecasted strength in H2 of FY25, even if the first quarter results were disappointing. And technology companies expanding into AI continue to boost investor sentiment within this high growth sector. Let's now take a look at what else happened on the market this week. Locally, from Monday to Thursday, the ASX 200 fell 0.86% as the global post-election rally took a breather across all global markets. Tech stocks managed to post a 3.66% rise this week, driven both by strength for the Nasdaq on Wall Street and from the local tech company earnings results. Material stocks, on the other hand, lost 6% over the week, tracking the declining price of iron ore. The winning stocks from Monday to Thursday were led by Block Inc, rising 17.8%, James Hardie Industries adding 13.5%, and Megaport gaining 13.4%. On the losing end, Paladin Energy tanked 24.5%, West African Resources lost 16.9%, and Bellevue Gold ended the week down under 13%. On the broader market index, the All Ords fell 0.85% this week as a 40% decline for Resolute Mining and an 18% drop for Developed Global weighed on the 50% rally for Energy Resources of Australia. The most traded stocks by Bell Direct clients this week were Novonix, Silex Systems and PM Capital Global Opportunities Fund. Clients also bought into BHP, Fortescue and ANZ while taking profits from De Grey Mining, Block Inc, CBA and Vulcan Energy Resources. And the most traded ETFs by our clients this week were led by Van Eck Bitcoin ETF, Vanguard Australian Shares Index ETF and Vanguard Australian Shares High Yield ETF. On the economic calendar front, next week we may see investors react to the release of the RBA's latest meeting minutes out on Tuesday as investors try to gauge the outlook for some rate cuts from Australia's central bank. Overseas, we have key trade balance and inflation data out in Japan, inflation and retail sales data out of the UK, and US building permits data out in the US, which will paint the overall greater picture of the inflation journey across key economies around the world. And that's all we have time for this Friday. Have a wonderful weekend and happy investing.